I still think that we're going to see more upside in terms of gold and silver and some of the other related commodities, including copper, in the second half of this year. We've only got a week left in the first half, so it's probably time to look at this a bit more closely. I'm going to just have a quick look at silver here today in this little video, and what sticks out to me with silver, aside from the fundamental and structural demand for it, is what the charts are doing. And so I want to quickly have a look at this. I'm going to make this a weekly chart for everyone's sort of viewing pleasure. And what I did here is I just drew a few lines, and you can kind of see what this looks like. We had a inverted head and shoulders pattern, which is basically a bullish pattern. We broke out of it, almost got to $30, and then retraced, which is what you want to see. You want to see, I think this is something that a lot of equity investors that are kind of new to the markets at this juncture are going to find out at some point before too long, is that consolidation and mean reversion is actually a good thing for the charts, for the stocks, to whatever that you might be looking at. I think silver is going to go higher again. These silver and gold and these things typically are quite volatile, so I don't want to make an immediate term call here. I think that's always a bit silly. But just going back to the daily chart, where you can see this a bit better, you can see that sort of moving back to support after the breakout. This is very classical kind of behavior. Now again, silver is volatile, so can it go down again? You bet. But so far, this is a pretty classical move. We had to move into resistance, then we moved down, then we moved back up. We broke out, and now we're sort of retesting that previous resistance, now support level, maybe, and now we're going to go higher. So I think for the second half of this year, our target is 30, which we almost got to a few weeks ago, so a couple of weeks ago, so nothing new there. But we actually raised it to 33 a couple of weeks ago, our target. And so I like that idea of getting to 33. And this all has to do with sector and group rotation and being able to analyze the market holistically, not just listening to financial TV stories, which ultimately typically don't end too well. We are holding a special workshop this week, and in that 3-day workshop, we're going to spend time explaining exactly how we approach the market, how we analyze which sector is going to come in favor next, which sector is going to fall out of favor next. That whole process, we're throwing in some brand new bonuses for the boot camp as well. In fact, a brand new momentum indicator as well. So make sure you join us for that 3-day boot camp. It's an hour each day, Wednesday, Thursday, and Friday. You can find out more about it on the next screen, and we'll see you there.